How to trade foreign exchange like a pro in 2016, part 1. US Canadian dollar tips. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. The title of this video is how to trade foreign exchange like a pro in 2016, part 1, US Canadian dollar tips. Let's get started, all right? In this tutorial, we want to share with traders day trading tips, swing trading tips, position trading tips that they can use throughout 2016 to trade, the US Canadian dollar currency pair, all right? As I explained to traders, we want to trade around key level. We are looking for high probability trading setups on near, key levels, all right? And we want to trade like the hedge funds, like the banks, okay? Therefore, we must know where are the key levels, okay? The key support and resistance levels, all right? So, as I explained to trader also, the price structure will determine the trading strategy that we will apply. The same thing we will do today when we are analyzing the US Canadian dollar, all right? I will start from the yearly charts. And I want to show traders, the first key level that we want to pay attention to is the high of 2015 because it's in that the price is now in that region near the high of 2015. So the first key levels that we must not forget is 14002. 14002. All right. So the definition of an uptrend is that the price will display higher lows and higher high. Okay, so if we will have a bullish trend, or if the US Canadian dollar will go out in 2016, the price must continue to display higher lows and higher high above the level of 14002, which was the high of 2015. Therefore, at this point in time, we will say to traders, priority to bullish signal above the level of 14002 and priority to bearish signal below the level of 14002. But there is a problem sometimes when we talk like this to traders. They think that I must buy above and I must sell below. Now, the point I'm making here is that according to the definition of uptrend, the price must display higher lows, higher high. If the price is still above the level of 14002, and the price start displaying lower lows and lower high, we can sell above it. Are you with me? This is about the price structure. The price structure commands our trading strategy. Though above the level of 14002, priority to bullish signal, if the price structure above that level has changed, which means price start displaying lower lows and lower high, we can sell. But if the price is displaying higher lows and higher high above that level, we will give priority to bullish signal. The next thing that we need to clarify is that if we are selling above this level, we need to be very careful, Now, if we are also buying below that level, we need to be careful. So when I say priority to sell signal below the level of 14002, the price structure or the market pattern will determine our trading strategy. If we are below that level, which I say priority to bearish signal, but the price start displaying higher lows and higher high, we will use a top-down trading method, to trade it. But if we are buying below that level, we need to be careful. I think it makes sense, all right? So the first key level is 14002. But I want to show you another key level here. The reason why I'm saying this, because you can see that this currency pair was going now for 3 years. This is the 4th year now. We are coming to a resistance zone. That's why if you are buying above 14002, you still need to be a little bit careful. There is a key resistance here I want to show you. So note it down. The level of, okay, right here, that's 14617. 14617. Okay, I'll color it into pink to get your attention. 14617. That level is the 161.8% Fibonacci extension level. 161.8% Fibonacci extension level of what? I'll go to the monthly chart, I'll show you. Of what? Okay, on the monthly chart, we have a chart pattern, a round bottom chart pattern. Okay. Hold on, please. I'm here. I want to note something down for myself. I'm still here. Okay. All right. Okay, we have a round bottom. Can you see here? Can you see the round bottom? From here, it probably went you see, round bottom. You see here? All right. Round bottom. So the price turn around. Now we have a round bottom. So if I use a conservative measurement for the depth of the round bottom, represent that with this red line here in the middle here. Okay. So if we apply Fibonacci extension to the depth of the round bottom, this is the 161.8% Fibonacci extension level. In normal condition, if the price breaks above the neckline of the round bottom, have I moved a line on my chart? Okay, I haven't. Okay. Now, if the price breaks above, in normal condition, if the price breaks above the neckline of the round bottom, we project the whole depth of the round bottom to the top. So we have a bullish target somewhere up there, somewhere. You can't see on my my monthly chart. Even if I go to the yearly chart, you cannot see that target level. It's somewhere far, far up. So because we can't see now, I will not dwell on it. I will just move away from it. But the point I want to mention here is that the next key level, apart from the 14002, is the 161.8% Fibonacci extension level of the depth of the round bottom that we see on the monthly chart. That level is 14617. Note them down. Have a notebook or have a page, okay, or something like that, Excel, whatever, and then note this key level down if you are trading the US Canadian dollar currency pair in 2016. All right, so though we were saying priority to bullish signal above, remember everything that I've said already, how we deal with this, okay? We are looking for trading setup, then we wait for the signal on another time frame, and then we enter the trade on a low risk entry point without ignoring what? The economy news and the fundamentals, okay? But you see, there's another key level, 14617. That's the second level. The third key level is what? I'm going to go now to the yearly chart because I want to go very fast. I measure the range of 2015. This is the candlestick bar of 2015. And the range of that candle, which means, okay, the height of that candle, that's what we call the range. Okay, from the bottom, from the low to the high, that's what we call the range. So now what I did, I divide that range into two. So that's half of that range, which is this side. This is half of the range, okay? You see my measuring stick. If I project it on top of the high of 2015, we have another key level. So apart from the 161.8% Fibonacci extension level, there is another key level that I want you to remember throughout 2016. That level is 15181. 15181. Okay, that's the projection of half of the range of 2015. Now, if we project the full range, okay, if you project the full range of the 2015 to the upside, putting it on the top of the high of 2015, are you with me? This is the range of 2015. If we project that range completely to the upside on top of the high of 2015, the next target is 163, 60, 16360. So if the price is going up, okay, which I doubt it, by the way, I doubt that it will continue to go up. You can see that they are already selling around a key level. Let's go quickly. I want to show you something, okay? Why you should know the key level. This is what's happening here. You see on the daily chart, the price going up, going up, going up. Professionals know where are the key level. That's where they want to trade. Here it is, 161.8% Fibonacci extension level. They don't want to sell here, so they bought it somewhere here along this zone, this level of 14002, which was the high of last year. Price going up. Where are they going to take profit? 161.8% Fibonacci extension level. Now, we don't say that they probably definitely change around a key level, but we just monitor, okay, monitor the reaction of the price around the key level. Watch it. What are they doing? Okay, if they are selling, you will see it. So after this day, you'll know that they are selling. The next day, you apply a top-down trading method if you are swing trading, okay, to take it down like a pro. All right? If they are buying, you will join them, okay? So you are watching a reaction of the price, looking for a trading setup on or near a key level. From there, you will implement a top-down trading method without ignoring the economy news, which can change the dynamics of a technical trading. Okay? So this is it today. You see, yeah, it is on the 2016, yeah, a key level. Okay? So these are where the professional making decisions. So here you see what's going up, going up. Oh, now this is the high, by the way. So it wasn't here before. But as you see, this year, beginning of this year, 2016, here we are, probably going to break too fast. Pull back a bit, this candle here, pull back a bit. The tail of this candle also try to retest it again to validate this resistance as a support level. Key level. So first key level, remember, 14002. Next key level, 14617. The third key level, all right, 15181. The fourth key level, 16360. This is to control the trade, manage the trade, if the US Canadian dollar is going up in 2016. So we will say priority to bullish signal up to the first key level. So priority to the bullish signal up to the level of 14617. If it breaks above that level and confirm that level, 14617, as a support level, we will now give priority to bullish signal until we reach the level of 15181. If it breaks above 15181 and confirm it as a support level or turn it into a support level, we will, okay, give priority to bullish signal above that level until we reach the level of 16360. All right. The opposite is also true. There are other key levels below. So apart from the level that are already given to you, there are other key levels. The median line of 2015, here it is, 12843. That's the median line of 2015, 12843. The low of 2015 is 11644, 11644. Note them down. The reason is, if they start selling as they are doing it now, near the 161.8% Fibonacci extension level, by the way, if you want to learn and understand, okay, the Fibonacci extension, go to www.dayprotrader.com. Don't just click and go. Have time and read it, please, okay? Especially, there is a page that we call 138.2% Fibonacci extension level, all right? So, all right, if they start selling, if they continue to sell, if the bearish momentum is becoming strong, and the price dip below, so we are saying priority to bullish signal above the high of 2015, because if there will be a bullish progression. You see, last year, this was the high of 2014. So we'll say to trader priority to bullish signal above. Look, this dark candle, 2015, above the high. Price, this is the definition of an uptrend. Price must display higher lows, higher high. The price structure, the market pattern will determine our trading strategy. Though we are in a bullish zone, the price structure will determine our trading strategy, nothing else. But as we are applying a technical analysis, one should not forget Forex Factory, Google Finance, Yahoo Finance to check the economy news, which can change the dynamics of the price structure. Okay? So same thing we are seeing again. This is the high. If it stay above and the price structure is bullish, prior to bullish signal. But if the price structure has changed, we can sell above, but we need to be careful. Now, if the price dip below the high, so if you were here and it stay below, it found a resistance below the high, it's bearish because what's happening? It fails. If a financial instrument, pay attention, if the financial instrument is going up, okay, it will display higher lows, higher high, until it fails to display a new higher high. This is the definition, this is the language of the price, okay? The price is the number one indicator. So here we are, this was the high, now it went up to display a new higher high, which is this point here, okay? Now if it comes back below the previous high, is a weakness. The price structure, the declining channel, will oblige us to change our bullish strategy and start selling. So below the high of 2015, 14002, the price structure will determine our trading strategy, priority to bearish signal. But if we are selling and the price structure allow us to sell and we are selling below that high, we need to pay attention to the median line of 2015, which is a support level, 12843. A support level can change into a resistance. Price will dip below it, okay, retest it, and continue to go down. The price structure will tell us whether it's going down or it's going up or it's consolidating. So if we are selling, okay, market price structure allow us to sell, and we reach this level, we need to be careful. Take profit, break below, retest, confirming this level now as a resistance level. We continue to sell again from the level of priority to bearish signal below 12843. If 12843 is now a resistance up to the point we reach the level of 11644. It makes sense? It's very powerful. So on the daily chart, okay, it's still a round bottom here. On the monthly chart, the price structure is a breakout above, okay, a round bottom. You see here? So this is why professional watching. There was a round bottom here, beautiful, very beautiful round bottom, chart pattern. I'll be talking about this chart pattern because there are a lot of blah, blah, blah on the internet, and I'll clarify to traders, practical trading about round bottom, not the theory alone. It's good, the theory, about round bottom, price will pull back. So there is another key level here. I want you to pay attention to the 50% Fibonacci retracement level of the round bottom. This level is here. Just note it down, 11358. So normally a round bottom, let me explain this very fast. You have a round bottom like this, what we usually see, or cup and handle, okay, as some traders call it, cup and handle chart pattern. Price will form a kind of round bottom or V like this, and then will pull back near the 50% of the round bottom or whatever they call it before resuming the trend. Therefore, I want traders to remember also the 50% Fibonacci retracement level of this round bottom on the monthly chart. That level is 11370. Let me note it down myself. Media line. Okay, I have a notebook here. So media lines of the round bottom. So anytime you are trading, okay, you have your notebook regarding the US dollar, the US Canadian dollar, and you just 11358. Is that what I said to you? 113. So it doesn't matter. 11358. I'll call it 11358. Okay. Round bottom monthly. You see, I'm taking my note here. So do exactly the same thing. All right, here it is. So you have it here. So I will put it also on my chart. So I don't want to get okay. Which color? I'll use turquoise for this one. Okay. So now you see. So if it's going down, you need to be careful. Okay, it's going down. The first level 12843 media line of 2015. Then the low of 2015 11644. Below that level, we have the media line of the round bottom, talking about, okay, cap and handle chart pattern. Watch it, 11367. All right, it makes sense? If we go to the daily chart, my friend, we have, let me wrap it up very fast. because myself, I need to go somewhere now. If you go to the daily charts, okay, I want to remove this. I don't need it anymore. The market or the price structure. Remember, the price structure will determine what? Our trading strategy. You are using a trading system or a trading method, the price structure will determine which strategy you should apply. The price structure has changed, the strategy will change. Or the tool that you may use may change. If the market environment also has changed, you may also adapt to the market environment. So we have here, okay, a rising channel on the daily chart. Yes or no? Okay, this is what we call the price structure. That will determine our strategy. So if you are using a daily chart as your trading setup, you will validate the trading setup on the higher time frame before going to the signal time frame, which is the hourly chart, and then you use, for instance, 10-minute time frame to enter the trade or 5-minute time frame to enter the trade, a top-down trading method. If the price is out of a channel, as you can see here, it's out of this channel on the daily chart right now, we project the channel. So for instance, if you project half of that channel, the blue channel, we will have something like this. We project it here, and we draw lines that are parallel, okay, to the first one. Okay, so you have something like this. Is it parallel? Am I cheating? Okay, all right. Okay, you see now. So don't forget, when you are applying the one strategy, don't forget, because I've done the same thing before. Especially if you are a new trader, you tend to learn something and you are applying that. You are focused. It's good to be focused, but don't forget everything else that you have learned before. Get into multi-talented trading. Draw line, draw trend line, draw channel, okay? Know where are the horizontal support level, the key level. You change any time frame, like I've done, I'll give you the key level. If you go on a 50-minute chart, have your line ready. Draw your channel on your, you go to any time frame, draw your channel, draw the line on that channel. But those key level that I'm giving you now, these are the most influential support and resistance level where the professional want to buy or sell. It makes sense? It is also powerful. My friend, I don't want to waste too much of your time. We are talking today about how to trade a foreign exchange or FS like a pro in 2016, part 1. In February 2016, I will be recording the second part of this series of video about forex trading, FS trading, foreign exchange trading, okay? And I will give you more information. So this is about how to trade foreign exchange like a pro in 2016, part 1, US Canadian dollar tips. So for somebody who, because some traders, okay, like to trade a particular financial instrument, I like to trade the euro, I like to trade the Dow Jones index, okay? So you are trading the same financial instrument, you're trading the US Canadian dollar, you must know those key levels. This will allow you to navigate through the market and make excellent decisions like a professional. They want to buy, you see, they sold it here. They are making decisions at the right place. So you want to join them, the best trading setup will take place around those key levels. Now, some traders do not have the yearly chart, so here it is. You can note it down. Anytime you find yourself, you see a trading signal, a trading setup for the US Canadian dollar, get out your note, check those key levels. Where are we now? Okay, where is it likely to go? Do we have a trading setup? Now, validate the trading setup. Now, wait for a signal. Be very, very patient. Don't overtrade, okay? Be disciplined. Don't give your money away, all right? You want too much money, you have too much money, you want to give it away? Well, send it to me, okay? I'm laughing, okay? I'm laughing, I'm joking now, okay? Send it to me. But the point I want to make, hate to lose, okay? And your broker will respect you. We wish you the very best in your trading. And until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to trade foreign exchange like a pro in 2016, part 1, US Canadian dollar tips. Speak to you soon.